tonight what we are going to talk about is why health insurance is such a game. Again, I'll introduce myself. My name's Curtis Barnett. I'm with the Financial Architects, and the reason that we were founded is because most of us in the middle class all agree that there's people out there that are wealthy and they are able to take advantage and pay less taxes, insurance, debts, things like that. They know some things that we don't know. And our whole point is, well, if they know things that we don't, and that's the only difference, why don't we just learn those things and we can do those too? And it's a common misconception that for some reason we're not able to do that, which everything that I'm going to talk about tonight and all the webinars and all of our series of financial doings are documented in libraries. They say the best way to keep a secret is to put it in a book, and that's so true that we're so busy working out there trying to pay our bills that we have no time to get wealthy. And that's what this webinar series is about. Tonight is about health insurance, and I'm going to show you how you can pay less but get double if not triple the coverage. Okay? And the way that we're going to do this is similar to the way that we do everything. It's the synergistic approach. In other words, most people, to get health insurance, they go out and they go to one person, or if they want car insurance or homeowners insurance, or if they want investments, or they want to buy a piece of property or whatever, they go to one person. But the problem is they don't look at it as a synergistic approach. For instance, if you were to buy, or let's say you're going to build your dream home out there, and your rich uncle gives you millions of dollars and spare no expense, you can hire anybody you want. Would you go to the best contractor, best electrician, best plumber, masonry person, carpenter, so on and so on and so on, and would you tell them what you were thinking you wanted, but then explain to them that you don't want them to talk to anybody else? You don't want your electrician talking to the plumber. You don't want the plumber looking at the blueprints. You don't want the contractor talking to anybody. I mean, that makes no sense. You'd end up with an absolute disaster. But yet that's exactly what we do with our personal finances and insurance and debts, and we somehow expect everything to work out miraculously. So that's what tonight is about. I'm not approaching this from the typical health insurance standpoint, because most health insurance agents are taught how to sell you a large policy with all these wonderful benefits. And that's not bad unless you don't need the benefits, and then what I would say is it's bad because you're wasting your money. Now, ironically, when we run an analysis for somebody, they typically don't need all those extra benefits. So, to get in tonight, we're going to show you how to do this and how to play the health insurance game. And yes, ladies and gentlemen, this literally is just a game. Okay? As soon as you learn how to play it, you'll learn that there's really nothing to it. You just never knew the rules the whole time, and you can't win a game if you don't know the rules. It's impossible. So the first question I'm going to ask everybody is, what we do is we do an analysis. Most of the time you signed up for a policy that your company provides just because that's what was available, or you took what a health insurance person told you to get for health insurance, but you've never really had an actual analysis done. And it takes all of maybe 10 minutes. We're going to do it right now. The first question I ask people is, what is your insurance for? I'll ask you a couple questions. Number one is, if you were to come down with, let's say, a cold or an infection, or you had a rash or something, think of the last time you went to the doctor and you had to go to the doctor. Doctor visits, the last time I went to or I had a rash or an outbreak of something, I had an allergic reaction to something, I went to the emergency room, or I'm sorry, not to the emergency room, I went to the urgent care. And in urgent care, it cost me $65. So if you look at my screen, that's about what the average we found in Orange County is. LA and Riverside are a little bit less, but speaking in Orange County, that's what you're looking at for an urgent care visit. And then let's say you have to have some penicillin or prescription drugs or something. Now, drugs vary widely, I understand, but generally speaking, they range about 30 to 60 bucks is the average. And this coincides exactly with what happened to me about a year ago when I went to the doctor. I paid 65 bucks to go to urgent care, and then I had a couple prescriptions that I had to take for a week, and I spent like, I don't know, 200 bucks or something like that out of my pocket. And I was, back to normal life within a couple days, and everything was wonderful. So the question I have for you is, if you get a boo-boo or an owie, we'll just call it, or like I had an allergic reaction to something, if that happens, could you come up with $200 or $300 to take care of that if you had to? And I understand you don't want to, and I understand it wouldn't be fun, and nobody likes to spend an extra unexpected $200 or $300. But the bottom line is, for most people listening right now and in the future who will listen to this, that's not going to break you. Let's just be honest, okay? You could come up with $200 or $300 if your child got sick, or if you got sick, or something like that happened, okay? Heck, most of us come up with $100 if we have a fancy date or something we all of a sudden get. We have to go out. So we can come up with that for our health. Now, the next question is, let's say you have a catastrophic car accident where you are laid up in the hospital for 3 weeks and it's going to cost $80,000. Or let's say that you have a tumor or an ulcer or something that puts you in the hospital and you have to get treatment for cancer. The big three things, they say 93% of all insurance money today is spent on the big three: heart attack, cancer, and stroke. So if you came down with one of those, that's a biggie. You're not going to be able to afford that bill, most likely, of over $100,000. So most people would say, yeah, there's no way, Curtis, I wouldn't be able to afford that. So the first question I ask everybody, which it's so funny, hardly anybody ever asks this when they do health insurance or when they sell a policy, is, what's your insurance for? Would you say it's more for boo-boos and owies, or is it more for catastrophe? And there's no wrong or right here. The point is just answer the question, and then it gives you a way to go. And most people, I would say 90-some% of people that I ask this to, say, well, it's for catastrophic events. But ironically, if we look at their insurance, it's not set up for that at all. They're spending all their hard-earned money, and it's not even set up for what they want it to do. So going on to the next thing is, let's assume that you said catastrophe, okay? Most of us are in that ballpark. I would say 94% of the people I talk to are going to say that, yeah, my insurance is if something big happens. I could, if I had to, handle the little boo-boos and owies and so on and so forth. But if something big happened, that's when I would really need it, okay? So when we look at most policies, most people are spending, when I do an analysis on their policy, they're scared to get, they want to have everything covered, their doctor visits, their prescriptions, they have everything covered. They've never used it, or they've used it very rarely. So let's say most people, I see them spending $3,000 extra a year than they need to be spending on their insurance to lower their deductible on their insurance by $2,000 for that year. And then if I ask them, have you ever even used your deductible, most people say what? They say no. So if you follow what I'm saying there, they're spending that's like spending $3,000 to insure a $2,000 car. It doesn't make any sense. But that's what most of us, we just never stop and look at our policies. So going with the catastrophe, I'm going to tell you kind of a quick story here. Is I've had friends before that have, a few years ago, I had a buddy of mine that didn't have insurance. God bless them. A lot of us don't anymore. People just can't afford it, so they let it go. And I just always have had health insurance. And what happened was, he called me because he had very bad stomach pain, and it lasted over 3 weeks, and some of his friends started saying, well, man, you probably have an ulcer or a tumor or something. And so he got scared, called me, and asked me if I could take him to the emergency room. And I knew he didn't have health insurance. I was really worried for him, so we went over and picked him up and took him to the emergency room. And as I was going to the emergency room, I started thinking, wait a minute, what's going to happen if he doesn't have health insurance when he gets there? I just always had health insurance, so I never knew. And I'm going to stop and ask you the question, what happened when we got there? And some of you are saying, well, they probably turned him away or they didn't do anything to him. And the other half of you are saying, well, they take him in. They have to. Yeah, I had no idea. It's the law. So if we stop and think about it, now, I'm not saying this is good. I'm not saying everybody drop your health insurance. But what I'm saying is just stop and think about it for a minute. If you're having a heart attack or something like that happens, nobody dies in America from not having health insurance. But yet everybody's worried to death, and this big political campaign and epidemic is happening over health insurance right now. But yet they have to take you, even if you don't have health insurance. So back to my story. He gets treated, and he goes home. Fortunately, everything was fine. They send him a health insurance bill. Let's say he doesn't pay it. What's the worst thing that happens to him? Okay, some people say, oh my gosh, it's horrible, they come after you. And so, well, stop and think about this for a minute. Who do you know that's lost a house over medical bills? Okay? I've been doing this for years, and I can tell you nobody that I know of. I've asked attorneys, and I've never heard any of them that they know. Now, there are people that have gone bankrupt, but the funny thing is 75% of people that have, in 2005 there was a study done, 75% of people that declared bankruptcy for medical bills had health insurance. 75% of them. So that's not the problem. It wasn't because their medical bills weren't paid. The problem is, it was because, think about this for a second. When my friend went home, if he didn't pay his medical bills, the worst thing medical bills, what they can do to you, is send you these pretty notices in the mail, and they tell you that they're collection notices, and you owe them money, and it can go on your credit. Okay, and I'm not saying it's fun to have bad credit and whatever, but right now the fact is the majority of people that listen into my seminars and stuff have bad credit. So most of us, if you have great credit, then awesome. But the reality is most of us in America know you can get by with bad credit. I mean, credit is something that it's only been around since basically the early 80s, late 70s. I mean, it used to be done other ways. You can get by without credit. You can negotiate medical bills. I've seen people negotiate them for 10 cents on the dollar. I've helped people in distress before negotiate them personally for less than 40 cents on the dollar. I've seen it done. So with that being said, you can negotiate or even just not pay medical bills altogether. I'm not saying that's okay. I'm not saying it's moral. I'm just saying this is the fact, okay? I'm not here to judge or whatever. What attorneys do is they give you your options and you decide whatever you want to do. That's what I'm doing. So you can ignore medical bills. But when my buddy went back home, could he ignore his rent? Let's say he had cancer and he was laid up in the hospital, or he couldn't work for some reason because he was so ill. The medical bills you can put off, but can you put off your rent? Can you put off your food? Could you put off paying for your kids' clothes or food or schooling? Oh, no, this is a different thing. So if we think about this now, what I ask everybody to do is stop for just 2 seconds here and ask yourself, really do this. Don't go on until you ask yourself this. Which is more important to you based on what we're talking about? And use your own, verify that what I'm saying is true here. You know people that have had medical problems and whatever, and you know people that have not paid, you may have not even paid medical bills before. Nobody goes to jail for it. People, they can't really do much to you. The fact is, if you could only choose one, would you pay insurance that pays the doctors, or would you pay for insurance that covered your income and your bills if something were to really go down? And most people say, well, Curtis, yeah, I never thought about that before. But I'd get something that covered my income, like a disability type policy or life insurance if you were to die to protect your family. See, while you're living and you're working, you can actually control what happens. You have income. But if you get sick or you die, you have no more control. And that's the most important insurance you can get. Most of us today buy car insurance, homeowners insurance, health insurance. And it's funny, if we stop and look at it, we spend thousands of dollars a year to insure things that if you lost your car and got no money for it, it would hurt, but you could go on, couldn't you? How many people have been kicked out and lost their homes in foreclosure? That hurts, that sucks. But can you go on from that? Yeah. Like a third of America is doing it right now. But show me one person that can continue on in life without income. So anyway, I just want to get the insurance priorities kind of back together here and show you most of us are giving our hard-earned dollars to pay for boo-boos and owies, and yet we don't have anything in place for, Holy Toledo happening. So what we do to rectify this is we put together a very non-traditional plan, because what people traditionally have quite simply doesn't work. Health insurance companies have cut back benefits and they're charging way, way more for insurance plans. So on the left here, just whatever you have or whatever you had if you don't have insurance, just pretend this is it. I don't know what you have or what you did have, but this is today's commonly sold health plan, okay? Now what we do is we go out there and we put in a 4-tiered approach. We go to 4 different companies to get a much better plan in place with much more benefits for the individual, okay? And what happens is we get a major medical plan first off, and the main thing we do is we typically get a major medical plan that covers your checkups and your preventative care. If you're a guy, that's your annual checkup, your prostate exam; for a woman, that's your mammogram, your pap smear, and whatever other womanly checkup things that you do. Those are covered in the medical plan because they want you to stay healthy. Then what we do is most of the rest of the coverage is all pushed towards large things, catastrophic events. Typically, I encourage people to get a deductible and a max out of pocket that's like around $5,000 versus they may have had one that was $2,000 or something, because it saves them so much money, and the likelihood is hardly anybody ever uses that deductible anyway. Okay? Now, now for some people, I don't want to scare you away. If you're a chronic, I've had a few people that are chronic, always going to the doctor, then you're going to need a lower deductible, or you're going to need co-pays or whatever. The point is we specify the plan for you, and that's what's not happening today. Plans are being sold, not engineered for people, and that's what's so frustrating to me. Now what's really cool is, so we save you so much money there on the major medical, then we go to a separate company and we get you an accident plan. Now check this out. A client of mine had a deductible there on their commonly sold health plan for $2,400. What happened was I put them on a major medical plan that had a deductible of about $5,000, but then I put together an accident plan. If you've heard of Aflac, it's not Aflac, but it's kind of similar to that. It has better benefits than Aflac does, but if you've heard of Aflac, then that's kind of what this is. Is this program, then any accident, okay, if you fall down, break your arm, if your kid hurts himself during football, if you get in a car accident, get whiplash, fall down the stairs, whatever, this accident plan kicks in and covers all the bills then that your major medical plan doesn't cover, because it says it pays up to $5,000. So if I get you a deductible of $5,000 and now your accident plan covers $5,000, well, you've got now exposure here of $100 versus on your plan you had an exposure of $2,400 or whatever it is. You follow me there? So you actually have better coverage now in the case of an accident. Let's go to a much more important part of the plan. On paycheck protection, this is to me what's most important out of everything here, is if one of the big 3 happens, heart attack, cancer, stroke, something like that, you're pretty much going to be out of work for 9 months is typical anymore. Okay? Or I've had clients that have been in bad fires or their kidneys have gone out. One of these major things happens where you can't work. What we typically do is we insure you for a year of your income. Now, you can get disability coverage and so on and so forth. I typically don't do disability because so many of my clients anymore and so many of America, since they've been laid off, are self-employed. And the problem with disability is it costs a lot and it gives you half of what your income is. And most people can't live off of what their income is today, much less half of what their income would be. Plus, you have to go through a 3-month or a 6-month waiting period before your money kicks in. The bottom line is most people, by the time disability kicks in, it's too late. They're already sunk and they're losing their house and so on and so forth. So I usually use, we can use disability if you like that type of a plan. What I use is a different type of plan called a critical care plan. It covers your paycheck. And if you're self-employed, then you know you may make $80,000 a year, but on paper to the tax returns you only show 30. Well, so if we get you disability, you're going to have $15,000 of income, which is nothing. On this critical care, what we do is we just put down whatever you need. So if you make 80 grand and you need every penny of that, we insure you for $80,000. If you make 200,000 but your bills are only 150, then you'd probably only need 150. But you pay for however much coverage that you want. You never have to show how much you make or prove your income to anybody, okay? So it's a very, very cool policy. The other thing that blows people away is it's completely based off of medical records. So in other words, instead of you having to be out of work for 6 months or whatever until disability kicks in, if you had a heart attack tonight and you had this insurance and you go back to work the next day, which would be crazy silly, but if you did that but you had a heart attack, you would still get your insurance benefit because you had a heart attack. It doesn't matter if you go back to work or not. The incident happened. That's what you're insuring. Okay, so that's the difference, and that's the kind of policy that we use. That's a lot more affordable for people. And again, if you want a true disability policy, then we can put that in there too, no problem. And the last thing we do that people really like is we get, whoops, went the wrong way there. We get you a dental plan, okay? And what this dental plan is it is an HMO, okay? It's not, this plan is not a PPO. The major medical plans that we do typically are PPOs and stuff. The dental plans, just to run through it really quickly, every PPO that I've seen, very rarely does a person end up making out on it. Dental plans are just not a wide enough program that they make sense. Every time I've run the numbers of what somebody was paying versus what the insurance paid, they would have always been better off just to go in and pay cash and negotiate with their dentist. Every case I've ever seen, until I found this plan. And again, it is an HMO, so if you're absolutely in love with your dentist and you have to go to your dentist, then again, this plan may not make the most sense for you. And if you have to have a PPO plan, I'll try to talk you out of it. I'll be more than happy to sell you one. They pay nice commissions, but I try to talk people out of things that I feel like are a waste of money or just an income producer for me. I want you to get good coverage. So with this dental plan, the crazy thing is it's actually less, it's cheaper or more inexpensive to get this plan, and because this covers your x-rays and your teeth cleanings. It gives you twice a year you can have your teeth cleaned and your x-rays, and the cost of the plan is actually less than what you would go pay your dentist to have your teeth cleaned. Plus you get good coverage if you need crowns or anything like that. So this is the exception, and that's the reason why we offer this plan, is it comes out very well. So I'm going to ask you this. For everybody listening right now, would you rather have your typical plan on the left, because again, we can do that too, no problem, or would you rather go with the 4-tiered approach on the right? Just pretend they're exactly the same cost. Which one would you choose? Okay? And if you choose the one on the left, no problem, that's what you should go with. If you choose the one on the right, this is what most of my clients end up doing. And the crazy thing is, I don't have the cost in here because I made it for a generic client, but if I was to show you one of my, they're private so I can't, but if I was to show you one of my previous clients, like one of the last ones I ran, he was paying $1,080 for his commonly sold health plan on the left-hand side. When we redid his plan for him, it was like $580, and that's a little high. I would say the typical savings we usually get for somebody is about 30%. But what I really want to stress is look at how much more coverage, and you're saving. That's crazy. You're getting more coverage, but you're saving money over the plan that you have right now. And then finally, the most fun is with this savings, like this last client, I'm just going to show the example. One of the clients that I worked with about a year ago, I just left their numbers in here, they were saving about $290 a month. Okay? Well, what can you do with $290 a month? For this client, what we did was we put that into a retirement program that's completely tax-free. Okay? And what this does is we also put a life insurance rider on there, because so many people I meet with, again, they're spending thousands of dollars for all this insurance, but yet they don't have their income insured with any kind of paycheck protection via disability or critical care, and they don't have any life insurance. So we were able to get this guy several hundred thousand or a couple $100,000 of life insurance, so that if he died, immediately his family gets $200,000. I mean, there's no investment that's going to pay that kind of immediate return, and that's all tax-free. If he lives, which hopefully he does, he lives a long and profitable life, his plan is completed if he's disabled, and if nothing ever happens, he's totally fine. Actually, even if he lives, period, whether he's disabled or not, this plan completes for him, and he's going to have, just by investing $290 a month, he's going to have over $1 million. And keep in mind, the way we do this is another webinar we do, but we put this and invest it tax-free. This guy's going to have $1 million for his family. This will pay him in retirement $94,000 a year, completely tax-free in his retirement, and the money will never run out. Now, how about that from your current health insurance? And the greatest part about this is, how much are you paying to do all that? How much did this client pay to get all he's got retirement now, he's got life insurance, he's got health insurance, he's got paycheck protection covered, he's got accident protection, he's got a dental it's incredible. So that's the main thing that I want to get across to everybody out there, is there's more than one way to skin the cat. The problem is, we're all skinning the cat the way our neighbor does, or the person that sits in the cubicle next to us at work. Stop that, because most likely they're complaining too. So think out of the box. That's exactly what the Financial Architects does. And what I would ask you is, if you feel like you're paying too much for health insurance, please contact me. And again, if you're not, there's been a handful of clients that weren't, and I told them they actually had better coverage than I could get them. And if that's you, awesome. But I can tell you, in about 5 years, on one hand, I can count the clients that's happened to. That's how bad of an epidemic this is. That's how bad many people are paying for insurance. Yes, even if you're on your spouse's policy at work and they're helping to pay for some of it, the majority of the time I still get them better coverage, and they pay less money for it. Just, that's how inflated health insurance is today. Okay? So thank you so much for being on the call. I also want to ask you, you're going to get a survey that's automatically emailed to you. Please it's going to take you not even 1 minute to fill it out. It's like 4 or 5 questions. Let us know how we're doing, because we pour our life and soul into this. And please email us and or give us a call if we can do anything for you. Thanks so much.